Hey traders, Raghee here, and the main goal of today's video is to put today's move in perspective. Not only the perspective of where we are within the month of January, but where we are in terms of price and trend. So let's start with price and trend, and then we'll jump on over to some of the seasonal composites. The idea here is that the overall trend is up. I gauge that trend by the structure of the 8, 13, 21, and 34 EMAs. They're still giving us a really nice, what we call double green. So this is definitely a market where the path of least resistance continues to be to the upside. And pullbacks like this and pullbacks like this are opportunities to be a buyer. Just that simple. Today was probably one of the more volatile options expirations that I can recall in some time. And I've also heard that today the open interest at the money options for the January 15 expiration are in some instances at all-time highs. And, in many ways, you've got a lot of delta hedging going on, not to go down that rabbit hole, but it just means we had a lot of volatility, a lot of volume mixed in while we have a month that is probably one of the more politically unusual months we've had, and we have this seasonal expectation for a potential pullback. Could this be the beginning of a slightly more prolonged pullback? Let me define what that means. Maybe into the wave, right? That's all I'm talking about. Just as we did back here, just as we did back here. We barely nicked the 21 exponential moving average. And for a lot of traders, that's a healthy reversion to the mean. I think we could actually see the move get down to the 34, but that still would be a really good buy zone. So my first buy zone starts around the area of the 13 to the 21, and the rest of my buy zone, my more conservative buy zone, is in this area between the 34 EMA on the high to the low. And there's your close right there, by the way. So there's your low and there's your high. So this is hardly a significant correction. We're just used to the market going up all the time, and it was a slightly large move, but it came on a day that we really should be prepared for volatility, not for weakness necessarily, but for volatility. Where does today's move land on sort of the historical price movement range of the market? Let's take a look at the Dow, which moved lower by 450 points. Is that a lot? Actually, it really wasn't. It really was not. You take a look at where the Dow futures were at, I believe it was 451. It's actually pretty decent for a Friday, but as generally as the market action goes, we weren't even close to that 600. Right? Our range today on the candle was 451 points. That wasn't even that volatile compared to historical price movement ranges in the YM. What about the NAS, which seemed to really take it on the chin? Today, the NAS's range was a total of 187, almost 188 points. Again, where are we within the context of the overall trend? NAS, again, uptrend, and then take a look. So once again, 188 points. Actually, this was a fairly sedate move, all right? But it's now 2 days in a row that we've pulled back. It's a slightly lower low than we've made for 5 days, and that's all it takes anymore for markets to panic. This is opportunity, gang. And it's also to be somewhat expected, because if you take a look at the mid to late month seasonal composite for these markets between the 9th and 17th of the month, it looked like we might have gotten away with not a major pullback because this is happening towards the latter end of that window. But it looks like this may be the beginning of that. It may be another session or so. I don't think it's going to be that prolonged. And I think this is ultimately going to give us some conservative level opportunities to get long. But in the premium video, I'll talk about exactly where on the broader indices I do want to be a buyer, because we might get some nice daily opportunities that we can take advantage of to trend follow S&P, Dow, NASDAQ, and even Russell. I'll see you in the next update.